Hey everyone, it's been no secret that the streaming content industry has been one of my favorites in recent years. The changing consumer behavior in its favor and the favorable competitive dynamics makes it an attractive industry for investors. Netflix specifically has been on my list of top stocks to buy in 2024. The company just announced its quarterly earnings update, and I've had a chance to digest this latest information. I'm going to share with you several important factors that came out of Netflix's latest quarterly earnings results, and I'm going to update my buy recommendation for Netflix stock. I'm going to let you know if I'm keeping Netflix rated as one of my top stocks to buy, or if Netflix is getting a downgrade following these financial results. There's a lot to cover, so let's jump right in. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So Netflix had a strong second quarter, 17% revenue growth, and an operating margin of 27% compared to 22% last year. These results led management to increase their forecast for 2024 for revenue growth of 14 to 15%, up from 13 to 15%. They're also increasing their operating profit margin guidance to 26% versus 25% previously. One of the reasons why Netflix has grown so nicely in recent quarters is the introduction of ad-supported membership. The ad tiers membership grew 34% from the previous quarter, and they're building an in-house ad tech platform that they'll test in Canada in 2024 and launch more broadly in 2025. For now, Netflix is gaining traction with the ad-supported membership. Where it's having difficulty is selling those advertising inventories created by more members watching more content through ad-supported memberships, which allows for more advertisements to be shown, but Netflix has to sell those advertisements to marketers first. And so that's where it's working to match the supply and demand and generate greater revenue as a result of this growing ad-supported membership. So Netflix had its 4th consecutive quarter of accelerating revenue growth in Q2. 16.8% revenue growth was above 14.8% in Q1, which was above the 12.5% in Q4 2023, and you get the point. The second derivative growth is an important feature of successful companies and successful stock price appreciation, and Netflix has continued that for several consecutive quarters. However, for the next quarter, it's forecasting 13.9% revenue growth, which would be a slowdown from the second quarter revenue growth rate. Now, Netflix's revenue growth is more volatile in recent quarters because of the exploding inflation in Argentina, and so the changing currency valuations and how that impacts Netflix's accounting really changes how they report these figures by a couple of percentage points at the very least. So that figure can be a little volatile over the next couple of quarters because of that region and the inflation and currency fluctuations between those two currencies. Still, operating profit margin continues expanding, 27.2% in the second quarter of 2024, which was above the 22% in the second quarter of 2023, and management is forecasting 28.1% operating profit margin in the next quarter. Now, second derivative growth for memberships is expected to continue or is continuing for 4 consecutive quarters as well. 16.5% year-over-year membership growth. That comes on top of 16% in the previous quarter, and you can see the trend line here increasing at an increasing rate. Netflix now has 277.65 million global streaming paid membership, way in the lead in this position, and second place is far behind. They added 8 million subscribers in the most recent quarter. Subscriptions being added in addition to the ad-supported tier. Netflix has been cracking down on password sharing, and so people that want to access Netflix can no longer do so using just one account for maybe 4 or 5 different households that just shared the password. Now Netflix makes it so that each household has to pay for their own membership, which is creating new members that now no longer are able to share. Interestingly, Netflix's cash flow from operations didn't increase. It actually decreased to $1.29 billion, down from $1.44 billion in the same quarter the prior year. Netflix is increasing the amount of money it's spending on content, which I would like to see as an investor. Netflix has proven to do an excellent job spending money creating content, movies and shows that people love to watch. I would love to see Netflix spending more money on this endeavor. They're good at it, and I want to see them do more of it. In fact, I would like to see even more than they're doing. But the growth gradual, I guess, is more prudent for management. They don't want to all of a sudden increase spending on content, but I like to see them continue finding areas where they can invest in new content because it's generating good return on investment for shareholders. So Netflix saying that in the next quarter, they expect subscriber additions to be lower than the third quarter, which had the first full quarter impact from paid sharing. This is the third quarter of 2023. So in the third quarter of 2023, they added 8.76 million global subscribers. And all they're saying is that they expect to add fewer than this number. It could be 5 million, it could be 4 million, it could be 7 million. They're not very specific. All they're saying is they expect it to be less than this number that they generated in the third quarter of 2023, because this was when they first started realizing the impacts of ending those paid sharers, those sharers that were using the accounts that maybe their cousins had or their ex-girlfriend had, and they're using that same account. Once they stopped that, of course, that created a demand for those folks that can no longer access Netflix. They needed to pay for their own membership. And so that created a surge in signups in the third quarter of 2023. And so now in the third quarter of 2024, they don't expect to grow as much as they did in that same quarter last year. And management says they expect to increase their operating profit margin each year, although the rate of expansion will vary. And that's a great thing to hear as an investor. Their operating profit margin is already really strong at 28%, and they think they can improve that even more. So that this business is built for economies in scale, and I wouldn't be surprised if this profit margin continues expanding just like management says, because it doesn't cost Netflix that much more money if 200 million people are watching its show or if 2 million people are watching its show. The more people that watch, the more leverage it earns from the money that it spends on content. And so it's built for economies in scale, and it is growing, which is providing a huge benefit to investors. As long as it continues growing, this operating profit margin is likely to expand, just like management says. So I highlighted earlier that they're increasing their spending on content. And in the most recent quarter, they spent about $4 billion creating new content. And that was up from $3.68 billion in the same quarter last year. In the first 6 months of this year, they've spent roughly $7.8 billion on content, and that's up from $6.1 billion in the same 6 months last year. I'd like to see them continue increasing this number, as long as I continue to see evidence that the content that they're making is resonating with consumers, leading to rising revenue, rising engagement, and increasing subscription totals. So the company delivered an excellent quarter, and the stock price is still reasonably valued. Netflix is trading at a forward PE of 28.87. So I've had Netflix stock rated as one of my top 25 stocks to buy all year long, and I'm reiterating that recommendation today. I'm stating that I'm still keeping Netflix rated as one of my top 25 stocks to buy right now. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.